Good morning, good evening, good afternoon. Everything but the one I'm supposed to say. Good afternoon. How how are we all doing? Hope everyone is doing well. Let me just check the audio, load it up on my phone, and we should be good to go. Let me just checking the screen. Yeah, seems to be alright. Let me make that announcement very quickly. Okay. Alright, good. Just gonna load up the live stream so I can just check the audio on my phone. Checking the screen. Yeah, we should be good to go. Good afternoon, Dan. How you doing? Hi, Derek. Hope you're doing well. Yeah, spam the heart a little bit. Right. As the same thing again. I haven't really made an announcement. I'm just kind of just sending in the link and not really saying much else. Obviously, just whilst that sale's going on. So just a quick disclaimer before we get started. There is that sale, by the way, guys. 100. So it's currently, well, it was $200. You can get lifetime access for just $100. There's the link. You know, it's fast track trading. It's just below here somewhere. Fast track trading on WAP. So it was 200, going down to 100 for like 3 days till Sunday, and then after that it'll be going up to $300. Obviously to match the value and the quality that we're getting. So yeah, it's got to be done. But yeah, 50% off sale for the next few days. Take advantage of it whilst you can. I know a lot of people have been for the past couple hours, but we'll see how it goes. So yeah, there's a new president, isn't there? Or prime minister, I think it's called, in Japan. If we just search that. Actually, it might be here somewhere. I want to find like a... What a bargain. Nice one, Josh. No worries, no worries. Happy to have you here. It's great. But yeah, since you joined, just obviously... You can add us on Discord, send us a DM on there. You know, any like issues, you can message us personally, or you can just tag us in the chat. Whatever, it's up to you. But now that you've joined, you can do that if you want to. Ex-Defense Minister Ishiba becomes Japan's new leader. Is there an article on this? I don't think so. But yeah, Japan have a new prime minister. Here we are. There's a tweet. Ex-Defense Minister Ishiba to become Japan's new leader. He wants rates to be increased. He's hawkish. Yeah, I noticed that as well. Hi, Donish. How you doing? So yeah, what happened was, if we go onto here, right, we got this move, but it happened inside the monthly fair value gap. Oh, we can get rid of that, to be honest. Happened inside of the monthly fair value gap. If you just draw this up properly, you know, what a coincidence that this reaction happened inside of a monthly bearish fair value gap. That's what this guy's saying. Same thing happened on the USD JPY, but so everyone's saying it's hawkish. Everyone thinks it's hawkish. Which means down. Because the JPY is obviously, the yen, sorry, is seen as a safe haven. So in times of like distress, I guess you could call it, basically what happens is the yen will be bought into. So I'm going to actually just quickly explain this for anyone interested. There's not really many people here because I haven't really made an announcement, so we're going to tell you anyway. Basically, what happens is, so when you buy the GBP JPY, yeah, you got GJ. Just quickly, I'm just going to say, we're accumulating right now, so we don't really need to be actively searching for a trade. We're just accumulating, so I can explain this. We have time to explain this. So GJ, yeah, if you buy the GJ, yeah, if you buy it, you're buying the pound and selling it. When you close the trade, you're selling it for yen. So you're basically buying pound and selling against the yen. So you'll notice that. So let's say we're up here, yeah. Let's say price is up here. We're at like 225, 226. That means £1 is 226 yen. So we buy £1 and we sell it for 226 yen. So that's how that works. That's the whole idea of this. So there's the base currency and the quoted currency. This is the base currency. And the quoted is like, it's like the quote. So it's like literally what you would get for it. Do you know what I mean? What you would get in that currency. So basically, when you buy the GBP, you're selling the yen. And what people like to do is sell against the yen because it has low interest. So when this like economic shit happens and basically, you know, the interest rates are 20%, whatever they are, inflation, all that stuff. So the GBP will inflate, so the interest rate will be increased. But the yen will stay the same. This will have zero interest, like zero interest. This will go up, and this will stay the same. And that is, they did that so that basically their businesses don't suffer. Almost, that's kind of how it works. I'm not going to go down the rabbit hole too far because you have to. In order for you to fully understand this, you have to understand something else, and you have to understand something else. So I have to then spend like 20 minutes explaining it. But basically, when you're buying the GBP, you're selling against the yen. And what people like to do in times of distress, in times of like crisis. So in the 2008 financial crisis was probably one of the main ones. Obviously COVID as well. This shot up because people, the aftermath of COVID really, because that's when shit started really hitting the fan. People would buy the GBP and sell the yen because it's got low interest. So people would take loans out and all that kind of stuff because it has low interest. So they'd buy. Trying to explain this properly. I have my note. If this was like a proper lecture, I'd have my notes here. But it's basically like people are converting it. They're taking loans out and converting it into other currency. So they're taking loans out in the yen and converting it into other currency. That's what it is in short. And that is basically what goes on in the financial crisis. So people would see that the yen or Japan has low interest and be like, "This is great. I'm going to take a loan out." Because it's low interest compared to like GBP, UK, all that stuff. So they'll take a loan out and then they'll change it into other currencies with that loan, and then they'll change it back, pay the loan off. Does that make sense? I really like how you explain things to us. Thank you. You know, I like to make sure I put myself in your shoes. Do you know what I mean? Make sure you fully understand everything. So yeah, people will take loans out in short for the yen and change it to other currencies, which drives these currency pairs specifically, like the USD JPY, the Euro JPY, and the GBP JPY up. But if they increase the interest rates, people will start getting out of it because it's not seen as a safe haven anymore. That's the thing. So people can just buy it. You can buy into GBP JPY, and you know the probability that you'll make money is quite high compared to selling the GBP JPY. Because of those interest rates, which affect people's decisions in taking out loans and all that kind of stuff. So people like to sell against the yen. I hope that makes sense. So because of that, now that you understand that, so that Japan has low interest and people like to buy and people see it as a safe haven because it has low interest. And I've just explained how that actually works. What this new prime minister is doing is basically what these are saying is hawkish, which means that he wants to increase the interest rates. So people are like, oh shit, this guy wants to actually increase the interest rates. I don't want to take a loan out with Japan anymore. I don't want to take a loan out with high interest, do I? No one does. That's stupid. So people are getting out. People are not selling against the yen anymore. People are getting out. And that's what this quick burst of this price action, that's what that was. And it's basically, I think he's tried 5 times to become prime minister or leader, whatever you want to call it. And this time he's actually succeeded. And obviously here it says he's hawkish. So everyone's like, okay, this guy's hawkish. I'm going to get out now before he starts increasing the interest rates. And I'm going to pay off all my loans in yen, my Japanese loans. So I hope that makes sense. Is it true that retail traders like you and me are the ones who move the Forex markets more through orders? Well, is it true? It's a bit of a weird question because I don't know for sure. And another thing is, it's like, it doesn't really have to be true. That's the thing. So it, like, what you've just asked me doesn't actually have to be true. What that is just a way for you to wrap your head around it. It doesn't have to be true, but it works. That's how liquidity works. It's like TP and stop loss. Now, it doesn't always work like that. Obviously, there's like for example, right? Big banks. This is what I'm saying. Big banks were probably the main reason this price was going up. Yeah. And now what's happened is probably at least one big bank has probably closed some positions in this. So obviously it's not 100% true. I don't know it's true. I don't know it's false. All I know is that idea works. And it's not about if it's true, really. It's like, it makes it easier for you to understand it. It allows us to basically give a solution, give a definition to something that we don't know. That's what that is. We don't know for sure if it's true or false. But it allows us to basically wrap our head around it and understand. And basically just give some meaning to the unknown, and you'll figure out, if you're in the course, you've probably been through the psychology module, but I basically go in depth on how humans, they like to add meaning to the unknown, and that's what that is. That some guy just made that up one day, and some other guys decided to listen. Now, there's probably some evidence to suggest it's true, some evidence to suggest it's false. I don't think we move the markets. I don't think we move the markets, but I think liquidity being at people's stop losses and take profits, even if it's false, it allows us to understand it, because it does work. Like, it does. You can trade that. Does that make sense? If you don't understand that, please say, and I'll try and reword it. But basically, what I'm trying to say, I'm going to say it again. I'm going to say it again, all right? It doesn't matter if it's true or not. That's all. It works. So that's basically what I wanted to say. We got there in the end. Now, so that's what's going on. Basically, that's a quick update, and that's a quick, fundamental lecture on this move down and why it happened. Now, obviously, this is completely unsustainable, so it's due a retracement. And as you can see, there is, I think, did this happen? Let's see how many. So this happened in 2 minutes. Jesus Christ. In 2 minutes, we went from 195 to 192. That's crazy. Let's see the volume. See, there isn't much difference in volume. It does make sense, though. Okay. I was just making sure. Right, so that's happened in 2 minutes. That's crazy. But we obviously left behind a nice, massive fair value gap, and a lot of people are going to be struggling here because we got this here. Yesterday's live notification. It might be because I put bums in the title. I think a few people didn't get a notification because I don't know if YouTube would push that because the title was Jerome Powell's here to touch our bums. I don't think YouTube are going to want to push that. But I don't know why I call it that. But yeah, so basically a lot of people are going to be seeing this massive fair value gap and they're going to be like, okay, so how does this work? Do we trade here? Do we trade here? Where do we look for the entry inside this fair value gap? Well, first thing, it brings us back to this question. Age-old question. Does size matter? No, it doesn't. It does not matter. The size of the fair value gap does not matter. Now, there's something I don't really use. I know how to use it. I don't really use it much because it only really makes sense in large fair value gaps. But there's something called PD. There's PD arrays, and you might have heard of that. But it's basically premium and discount. So a fair value gap is all about getting fair value. Yeah, that's what it is. The market is always seeking fair value. what the market or what everyone thinks price is worth. That's what it is. Now, there's people who think price should increase, they're bullish. People who think price should decrease, they're bearish. Now, it's all about finding the fair value, which is the middle ground of that. So when we move down very quickly, the buyers are like, that's not very fair, that's not very fair, we're going to push price back up a little bit. That's basically how it works. Now, there's not some guy sitting there thinking that, but, you know, just dumbing it down, that's how it works. Now, inside of a fair value gap, there's this concept that it's basically, there's a premium and a discount area. So the premium is where people will want to look for sales, because it's like the best price. So if you want to sell something, you don't want to sell it at discount, do you? Like, I've got a discount on at the moment. If there was a decider where it's like everyone who's just joined off for $100, I could turn that into $300. You know what I mean? Like, it's like, obviously I'm gonna want to sell it for $300. Like, that's just, you know, if you think anything else, you're just stupid. So it's like, that's how it works in the markets. So I sold it at a discount. But in reality, if you're going to sell something, you really want to try and get it for premium, don't you? You want to try and get as much money as possible. That's not the whole idea of the course, by the way. Don't get any ideas. What I'm saying is, when you're selling anything in life, you want to get the best price for it, don't you? Simple as. Now, when you're buying anything in life, if you want, think of it like this, literally. My perspective is, let's say I was selling USB sticks, right? This is my hard drive. There's no dodgy porn on here. Definitely. Sorry. If I was selling USB sticks, right? If I was selling USB sticks, I'd want to get the best price possible. If you were buying USB sticks, you'd want to get the best price possible. That's what it is in the markets. So this is where people will want to look for sells, where you want to look to sell something at the best price possible. And the discount is the opposite. So when you're buying something, you want to get it at a discount, don't you? So that means I don't really use PD arrays or anything like that much, only when there's like massive fair value gaps like this. So what you'd want to see, right, if we're looking to sell, which we are, inside of a bearish fair value gap, where would we want to look at it? The premium price or the discount price? Obviously, we want to sell at a premium. And it's all decided by this 50% mark. Now, you know, I don't use it, but if you wanted to use it, you'd have to get a Fibonacci out and, you know, drag it from box to here, so then you can find out the 50% range. But obviously I don't, so I just drew a box in here. It's about 50. Now, the middle is called equilibrium. And you would basically want to buy above the equilibrium, and you want to sell above the equilibrium and buy below the equilibrium. So this is a bearish fair value gap, right? This is a bearish fair value gap, and we're already bearish. We are already looking for sells, which means that we want to look for sells inside of this area, the top half of the fair value gap. Now, you can use this on all fair value gaps. I don't. I use it just on the big ones, which don't really make sense. So you basically want to look for sells inside of this area, which means that we want to wait for price to come up to this area before looking for sells. Something like this, yeah? That's what we want to see. And that's pretty much it. Like, you know, there's not really much else to it. What you can do is you can overlap things. So there's basically like a BPR right here. If we draw that out, you can see. So what we'd want to do is look for sells maybe inside that area, just to be extra safe. And that's it. That's the whole message I was trying to get across. If you're basically looking at this fair value gap and you're like, what the fuck is this? How do I trade this? Put a line in about halfway and look for sells above it and buys below it. So in a bullish fair value gap, you'd look to enter at the bottom. In a bearish fair value gap, you look to enter at the top. I hope that makes sense. But yeah, that is the lecture. Do you think the price will go to the daily fair value gap or 1 hour order block? Well, I don't trade order blocks. So the fair value gap. Yeah, I guess you could buy on the way up if you wanted to do that. You could. It would make perfect sense. I'm not going to do that though. Like, this isn't guaranteed to happen. This is just where we want to enter. This is the best area to enter. But you could buy all the way up if you want to. If you obviously get overconfluences. If we manipulate to the downside, maybe look at taking buys up to here. That would make perfect sense. But yeah. I hope that makes sense. I hope that's cleared the air for some people who are struggling to like figure out what to do with this. That's what you want to do. So yeah, that's the PD arrays. What I'm going to do now is I'm going to explain what I'm thinking with this. So pretty clearly we're accumulating. So we want to be looking for that manipulation. Where could we manipulate into? There's multiple areas. If we look on the 1 hour down here, let's see what's going on. So there's a fair value gap here, which we came into and respected over here, as you can see. There's a fair value gap here as well, which means there's probably one on the 4 hour. There we are. You'd want to align those two like this to get the best entry possible. 15, let's check the 15. There's a fair value gap right here. So you can see this, because of all these overlapped grey boxes, you can probably see like a really dark grey now. That's perfect. That's where you really want to be looking for your entry. As I said, like, I don't use the PD array much. Like, that's why I'm not applying it here. I'm only applying it to this because it's a massive fair value gap. But yeah, so we'll look to manipulate. If we're gonna manipulate to the downside, we'd look to manipulate into that hot area here, where it's like really grey. If we manipulate up, that's what we'd want to see, really. So what I'm saying is, if we manipulate up, it's too risky to say because of that massive fair value gap. So if we manipulate up, you don't really want to take sells. You don't really want to take sells until we're back up here. Maybe, obviously, until we're like, if we melt all the way to the downside, like over here, you can start looking for sells still. But really, if we manipulate up, you'd want to look for your sells up here. If we manipulate down, that's just because of the way it's going. You could use other fair value gaps over here, but just because of this structure, that's why we're waiting for that. That's the safest grade A setup. But if we manipulate down, what you could do is you could get in here and then obviously take a buy position up to here and then take a sell position all the way down. I hope that makes sense. So we're looking for a manipulation. We could either manipulate up or down, obviously. If we manipulate down, you want to be looking around about here. If we manipulate up, you want to be looking for entries around about here. Now, obviously, that is a massive manipulation, which means that it's probably just going to be accumulation distribution. So when we come up to here, you want to really be looking for that accumulation, depending on how we get there. We'll obviously have to see that. We'll have to play it by ear and see what happens when we get there. But yeah, I think the cleanest trade would obviously be a manipulation to the downside with a distribution to the upside. Josh, when you have a fair value gap, then price comes back through it further on. How come the fair value gap is still valid? It hasn't liquidity been taken then? You're right and wrong. Like, I get exactly what you mean, but it's not about liquidity. It's just an imbalance. So it's like, hasn't the imbalance been filled then? That's what you'd say. It's not about liquidity there. So you're right. Just got to say that. So when you have a fair value gap, then price comes back through it further on. Do you mean like retested? Like where it's like if we had a fair value gap, it's been touched and then it comes back to it later. I can explain that for you. So like, is this what you mean? So see this fair value gap here. See how we've already came back into it. And if we were coming to it again, it's still valid. You're asking why? Or you just ask like, or do you mean like a fair value gap from ages ago? The one above. Oh yeah, no. Oh yeah. Like this one here, because we've already come back to it. How come it's still valid? Is that what you're asking me? Exactly. Yeah. Okay. That's because basically, you've probably not seen this, but I used to trade support and resistance. You might have seen that. You might not have seen that. I used to basically trade all of it. So very quickly, this is going to kill two birds with one stone. Derek and Dan, it's going to answer both of your questions in one go. You ready for this? So, support and resistance, right? Support and resistance. This was the first, basically one of the first ever. This is one of the first ever technical analysis ever. So it's like you have fair value gaps, you have liquidity, you have order blocks, you have breaker blocks, you have breakaway gaps, whatever you want to call them. It all stems from support and resistance. So we're going to touch on liquidity very quickly. This is going to take 5 minutes, and then we're going to look at the charts again. And we have a nice move down like this. And then we have a nice move down like this. Okay. So I'm going to explain. Josh, can we buy now? Sorry, guys. 1 sec. No, look for a candlestick pattern. So, fair value gaps, yeah? We're going to draw one here. I'm going to show you this, and then I'm going to show you an example. Liquidity. We have liquidity here, 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 and here. Right. Fair value gaps. We're going to start with that. So, a fair value gap is literally, right, when you have a move like this, very efficient, very quickly, that is a lower time frame support and resistance. What actually is a support and resistance? Let me show you. So support and resistance. This isn't really natural price action, but it still gets my point across, right? So see how we made this high, broke it, then came back to the low. If we can draw a box from there to there and see, like, this point is where price is always touched and rejected on either side. Do you see that? This happens quite a lot, by the way. Now, what's happened here is this is a resistance zone because price has come up to the resistance, touched it, and rejected it. Yeah? That's resistance. And that's the definition of resistance, really. Then it's come up, came down. This is then the support zone because it's supporting price from going any lower. So how do you identify support and resistance? You just look for areas where price is touched and rejected multiple times, just like this. See how it rejected here, rejected here, rejected here, and rejected here? See that, yeah? Now, see this resistance zone, yeah? This is a resistance as of right now, here. Then we break above it. Yeah? Then we come back to it and continue up. Now, I want you to focus on this area right here. Focus on that. So, we have a nice resistance. Yep, we break straight up above it. Here, we will form a higher time frame fair value gap. This move up will be a higher time frame fair value gap. Then we come back to the fair value gap and respect it and then continue up. Do you see that? Do you see what I'm saying here? So we have, forget about fair value gaps for a second. We have a support and resistance. We have a resistance zone which we break above, then come back to and turn it into a support zone. Now forget about support and resistance, yeah? Forget about that completely. Think about in just terms of fair value gaps. So this price action here, right? Let me move that across. We move up very quickly, then come down and respect the fair value gap. But this is also the resistance zone. So what I'm saying is, a fair value gap, let me write it out for you. A fair value gap is a lower time frame support and resistance level that was disrespected. Yeah, that's it. That's it. It was burst straight through very quickly and turned into from a resistance to a support, or from a support to a resistance. That is what a fair value gap is not by definition, but a lot of people don't even know that. A lot of people are idiots. Don't be an idiot. A fair value gap is a lower time frame support and resistance level that was disrespected. Now, why is that important? Why do I need to explain that to you? Well, going back, forget about fair value gaps, going back to support and resistance, you can see that this was a resistance, then it was a support, and it was still a support here, then it broke through and still became a resistance. Yeah? So in terms of support and resistance, it's always going to be valid. So it's like support and resistances, support, the plural for support and resistance, multiple support and resistance. Support and resistance levels, there we go, in general, always pretty much last forever, near enough. Now, going back to fair value gaps, so this is a fair value gap, yeah? But it's also a support and resistance. Therefore, it's going to be respected in the future again. Does that make sense? So, like, this is what I'm talking about. Like, fair value gaps, like the market's filling imbalances. It's all just conspiracy theories. Like that, no one knows if it's true or false. All we know is that it works. So that's why I still use old fair value gaps sometimes. And it's typically the more recent ones, not like ones from like years ago. It is obviously ones from like the last swing up, or the one before that one, or the swing up before that one. But that's why, because fair value gaps are a lower time frame support and resistance zone, and support and resistance zones are near enough always valid. Okay, so that should answer your question about why I'm using fair value gaps that have already been like filled and all that stuff. Now, Derek, liquidity, as you can see here, so we have buy side liquidity here and sell side liquidity here. Buy side is all previous highs, sell side is all previous lows. Buy side, or buy, is when there's buy orders filled, and sell side or sell is when there are sell orders filled. Okay, so as you can see, this is a nice move up. We take buy side where buy orders are filled, we continue up, then retrace, then take buy side where buy orders are filled. Yeah. But it's also highs and lows, and liquidity is also support and resistance zones. Now, how does that make any sense? We'll see this, right? Let me just draw this out in terms of support and resistance. See that? So we have a nice like resistance zone here, or buy side liquidity, or a high. We then make a higher high, or take liquidity, or break above the resistance zone, or create a fair value gap. See all these different ways of interpreting it. It's all just support and resistance. They're all just with different names and conspiracy theories attached to them. But liquidity is basically buy side where buying orders are filled, and sell side liquidity is where sell orders are filled. And I think that is liquidity. Like that's all it is. I can explain how to trade it if you want me to, but that's all liquidity is. It's where orders are filled, orders are resting, and orders are filled. Every time I say that, I feel I can remember order filled. But that's how it works. So what the institutional traders, the market makers, the ones who move the market, whatever you want to call it, it's just a theory. But what they will do is they will target this liquidity in order to fill their massive position. So let's say the market makers wanted to take a nice sell position, yeah? They wanted to sell 600 lots of GBP JPY, but only 400 lots are being bought. So if you only want to buy 400, but I want to sell you 600, how do I get you to buy more? I activate your buy position. So we take buy-side liquidity, which activates buy orders, which then fills this gap here, which creates enough liquidity in order to fill that gap so that then they can sell their position. And then what will happen is we'll have a move like this. And that is called a change of character, where we take buy side, then take sell side, and continue down. We don't need to get into that, but I hope that answers the question. I did it in one go. If there's any questions at all, anything you don't understand, the smallest thing, ask or just DM me. Just make sure you understand it. But yeah, that's why I use fair value gaps that have been like respected previously, and that's how liquidity works. I'm dropping so many gems. Oh. You know, most people would charge you for this, and I'm just doing it live. On demand. For fuck's sake. What a guy. Right then. So you can see we came into that fair value gap now. Looks like we are manipulating. As I said though, my bias is bearish. I'm not taking buys. Just to clarify. What you'd want to see is a move here. Doji, move up. Something along those lines. And you can target this area. What I would do is I would target this area ultimately, like have an ultimate take profit placement. Have ultimate take profit placement and then obviously manage it on its way up. So where would you manage? Well, you'd look to manage here at this buy side. And then there's these inverted fair value gaps over here. If we go up to the 1 hour, there's an inverted fair value gap here, which was bullish, is now bearish. So you'd want to be looking to manage around about here. And that's pretty much it. They're the three areas you'd look to manage. So the way I would do this, the story would go, you know, we break this high or take buy side, then I'm like, yep, I'm break even now. Then we continue up to here, then I'm like, okay, I'm at the buy side, or, you know, we'll probably make a fair value gap, or we'll make, you know, a previous low or something like that. Well, Derek, it's not that it's not about the conspiracy theories being wrong. It's like the theory is right. It's right in theory. It works. Like, the idea behind fair value gaps is a theory, but then again, I use fair value gaps. People in my course use fair value gaps. People in different communities use fair value gaps. A lot of people use fair value gaps and they make money from trading. It's not about the conspiracy theories being right or wrong. I just want to, like, you don't have to you don't have to ignore them just because they're conspiracy theories, because the practice of them does work. It does make, like, it does work. Does that make sense? So don't decide not to use fair value gaps because, like, there's a conspiracy behind it. Do you know what I mean? Yes, exactly. Where was I? I think I was talking about managing. Yeah. So the story would go, we move break even here, and on our way up, you know, we make a low, or we make a high, or, you know, we make a fair value gap or something, and then I just put my stop loss above that, below that, as we continue towards this take profit. But as I said, I'm only looking for sells, which means I'm only going to be looking to enter any trades up here, which also pretty much means I'm done for the week, and I'm only going to be looking to take that trade probably Monday, Sunday, Tuesday, early in the week, and see how it plays out. Hopefully we can move back up. But yeah, that's what you want to do. If you want to take this trade, by all means. But you want to wait for a candlestick pattern inside like these fair value gaps here. Then take a nice entry. And then you can do what you want, manage on its way up. No problem. Happy to help. But yeah, I think that is pretty much it, guys. That sums it up. What I'm going to do is I'm just going to have a quick look at all my analysis. All my analysis. All my analysis on gold, on GU, EU, EA, whatever you want to call it. USD CAD and USD JPY. We're going to see what's been going on there. So GJ, standard story. We know what to do. Bitcoin, bit of a mess. I haven't looked at this for a while. We went straight to distribution, it seems. I'm not looking at that. Bit messy. Actually, nah. I suppose pretty clean. Sorry, take it back. It's pretty clean. Nice accumulation, manipulation. We're breaking, making new highs, relative new highs. But the only thing is, guys, if we go to the 4 hour, this should look very familiar. Accumulation, manipulation, and we've took this liquidity as well. And we took that liquidity up there. We took lots of liquidity. Now, there's also this 1 hour fair value gap right here. Looks nice. It's also a 4 hour. So we'd be looking to finish manipulating inside of that area. Really. But this is the manipulation phase as of now. Oh, sorry. Wait for a candle pattern on the 15-minute time frame. Basically, whatever time frame you analyze AMD on is pretty much the time frame you want to look for the candlestick pattern on. But Bitcoin, people are going to be like, ooh, yay, new high, ooh. This is manipulation. Manipulation, buddy. Keep it moving. So, we can look for sells. Long term, back to the bottom of this range. Once we get a nice candlestick pattern, maybe on the 1 hour, something like that. And it's also an internal manipulation as well. So this could line up nicely for sells if anyone's interested in that. I'm not. But we'll see how that goes. External accumulation, manipulation, and an external distribution makes perfect sense here. We've just took buy side here and here and here into a 4 hour bearish fair value gap. So it makes perfect sense to flip and head down off of this. Gold, what are you chatting? What you telling me? So gold manipulated here. Still on its way down. Sorry, no. It's finished. That was external. That's what I've marked out. And we had an external manipulation, external distribution taking that liquidity. We can get rid of all that. That was right. Obviously it was. So gold's looking bearish as well. It's not looking bearish. It's looking overbought. So we need to correct, basically. And we formed a nice candlestick pattern here. But this range is quite small. We did take this range. As you can see, we took that range. Like we took buy side here, then came down, tried to take some sell side. So I don't really know. It's a bit messy. We could continue down, but we don't necessarily have to now. We'll see how that goes. GU. I don't trade GU. It's a bit of a mess. Let's see what's going on the 15 though. Yeah, a bit messy. Accumulation, manipulation, distribution. At H1 that was. So we'll maybe be looking for a move back, which means we're looking for a really you want to be waiting for that accumulation next. I'm not going to draw all the boxes out, but that's a consolidation, manipulation, distribution, expansion. Euro US, Euro. This always throws me off. Euro AUD. What was going on here? So we've seen that. All right. As yet again, I was correct, as always. No, I'm messing. But we had our accumulation, manipulation, distribution to the upside. I was anticipating a consolidation, which we got. Then we manipulated, very small manipulation. I probably wouldn't have took that. We took that and then obviously melted to the downside like I predicted or anticipated. What is going on here? What the fuck? Oh, this is probably from a lecture. It's not even live trading really, is it? It's just live lectures. But yeah, that's that. I haven't really analysed that. USD JPY. Wait for that candlestick pattern and you could basically get a buy. I'm not really going to look too much into that, but yeah, that's the analysis. If you want to take buys on GJ, look for the candlestick pattern on the 15, something like that. Bitcoin, looking bearish. Gold, looking overbought. GU, wait for that accumulation. Gonna get rid of this. USD JPY, look for buys, look for candlestick pattern and you can take buys. Need I say more? But that's that. That's that sorted, guys. I don't really... Oh, shit. Don't really have much else to say. I might as well just buy that, might I? I don't know why. I've just refused to buy it. I don't need it. But it gets rid of ads. Actually, I haven't seen an ad on this page in a while. Is it because I have an ad blocker on? I might do, actually. Fuck knows. Anyway, that's me sorted. I've analysed GJ, I've analysed Bitcoin, analysed gold, all that stuff. I've told you what to look out for if you want to take a trade today. Just look for that candlestick pattern. The only thing is, it's Friday, so we close on at 10 o'clock in about 7 hours, just under 7 hours, which means we're going to be dying. We're going to have less from volume as the hours go by. So you probably, if you want to take the trade and get some experience, do it. But if you want to be a profitable trader, just wait until like Monday, really, or Sunday night, see what's going on then. That's the best bet. But yeah, that's me done. Bitcoin, GJ, gold, GU, USD JPY. Yep, that's me sorted. There will be a live lecture later on today at 5 o'clock. And if you want to join the course or you're thinking about doing it, now is the time. It's $100. It's stupid not to join. It's $100 for lifetime access, and then once this sale ends, it's going up to $300. So if you're thinking about doing it, if you're on the edge, honestly, it's worth it. You get lifetime access for just $100. The link is in the description. I'm doing the first live lecture in a few weeks or a few months. They're starting again. So if you're in the premium, if you want to watch that, join the premium. It's on the Discord server. That's where that will be held. But yeah, join that. Make sure you do it. The sale ends on Sunday. $100 lifetime access to everything. You can learn to trade exactly like me and the people who have already joined the course who are getting results as well. But yeah, that's me done, guys. I don't really have much else to explain. No problem. Happy to help. I'll see you guys. I'll see the premium members for the live lecture later, and I'll see you guys on Monday for the same stream at the same time.